Morning, Steve here in Chicago with the morning grain comments, and it's Friday, and so everybody's excited about that. Next week we have shortened hours with the Board of Trade closing early, Christmas Eve, and closing on Christmas Day. So overnight prices up just a little bit. Pretty low holiday volume as the market kind of sits here and waits for the next big news, headlines or something like that. Number one is that southern Argentina, which has been very dry up to this point, got some really good soaking rains overnight, so that helps conditions there. Brazil, weather conditions are pretty favorable, except for northeast Brazil, Bahia, where it's been dry. So there are some people that are beginning to think that the Brazilian soybean crop somewhere between 122 and 126 million tons. We also noted that a Chinese ag consulting firm came out and said there'll be no problem reaching the phase one pledge to secure $40 billion of U.S. ag goods. They pegged the starting in February or March, and over the next 12 months they suggest China's going to secure 45 million tons of U.S. soybeans, 8 million tons of sorghum and corn each, 5 million tons of wheat, 8 million tons of DDGs, and livestock, they're talking about 1 million tons of U.S. pork and poultry and 800,000 tons of cotton. Some people think that some of their grain numbers may be a little bit high and that they actually could take more pork, beef, poultry, dairy, and other ag products. The other thing is that they didn't mention ethanol. Some people think they'll take 6 billion gallons of U.S. ethanol. So again, that's a positive thing. We come back first of the year, they set a date for signing, and then 30 days later, they're supposed to start buying. I think the key here is that, again, when we look at the managed funds, right now we guesstimate that they are short about 60,000 corn, 80,000 beans, and 26,000 meal. And I think that they'll cover those shorts after the first of the year going into any deal with China. They're long a record 103,000 soybean oil, and I think that's because of the lower Chinese crush, and China's importing a record amount of vegetable oil, and the fact that Malaysian palm oil supply might start dropping. We also note that the funds are long about 30,000 wheat, and I think part of that has to do with the fact that southern hemisphere wheat crops are smaller. We're at kind of a time frame in which there's not a lot of global trade going on, not a lot of global farmers selling, so there's not a lot of resistance if the funds wanted to continue to buy. It was interesting to note that last year, obviously we're going to be remembered by two things: a weather year here in the United States and then the trade wars. But March corn range last year was 365 to 476. The highs were made during the spring planting delays. Lows were made in September. March beans range 841 to 982. Highs were made in February before the South American harvest. Lows were tested in May, September, and early December. Again, that's when the market is concerned about too much supply versus demand. And Chicago March wheat range 460 to 573. Lows were made in February, May, and September's highs were made in June. Most people look for similar trading ranges in 2020, with the key, again, China trade, weather, and also the funds money flow. Just early start in the weather, our weather meteorologist thinks we'll have another wet spring. So again, wouldn't really be short these markets going into the China trade. I don't know if it's worth buying and chasing it on the upside. And again, most people feel that once China starts buying, assuming normal weather in 2020, that's a good place to sell the market. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day.